Are you tired of hearing about crypto millionaires while your portfolio struggles? You might be making critical mistakes that could cost you thousands or even your entire investment. In this video, we're exposing the biggest crypto mistakes that will make you lose money. From fear of missing out driven trades to falling for pump and dump schemes, we'll break down the most dangerous errors and how to avoid them. Whether you're new to crypto or a seasoned investor, these mistakes can ruin your financial future. Stick around until the end to learn the #1 mistake that even pros make. If you want to protect your investments and maximize your profits, hit that like button, subscribe to the channel, and turn on notifications so you never miss out on essential crypto insights. Now, let's dive into the costly mistakes you must avoid. 1. Ignoring proper research. Many investors jump into crypto based on hype rather than facts. They see a coin trending and throw their money in without understanding the project. This often leads to massive losses when the hype fades. Every crypto has a white paper explaining its purpose, team, and technology, yet most people never read it. A lack of research means you're blindly investing in assets that may have no real value. Scammers exploit this by launching worthless tokens with flashy marketing. If you don't verify a project's legitimacy, you risk buying into a scam. Look at the team's background, partnerships, and real-world utility before investing. Remember, if something sounds too good to be true, it probably is. Doing thorough research separates smart investors from those who lose everything. 2. Falling for FOMO, fear of missing out. FOMO is one of the biggest emotional traps in crypto. Prices surge, social media hypes up a coin, and investors rush in without thinking. They believe they'll miss out on the next big thing, leading them to buy at the peak. Unfortunately, many end up buying just before the price crashes. Market manipulation plays a huge role in fear of missing out driven investments. Whales and influencers pump coins to create artificial demand, then dump their holdings for massive profits. Retail investors get left with worthless assets. The key to avoiding fear of missing out is discipline. Never invest in something just because others are. Instead, set clear entry and exit strategies and stick to them. 3. Keeping all crypto on exchanges. Exchanges seem convenient, but they're one of the riskiest places to store your assets. Every year, major exchanges get hacked, and investors lose millions in crypto. Unlike banks, exchanges don't guarantee your fund's safety. If an exchange shuts down, your assets could vanish overnight. Even the biggest platforms have suffered security breaches. The best practice is to store your crypto in a private wallet. Hardware wallets offer the highest security, keeping your assets offline and safe from hackers. If you must use an exchange, enable two-factor authentication and never leave large amounts on the platform. Remember, if you don't control your keys, you don't control your crypto. 4. Overtrading without a strategy. Trading crypto without a clear plan is a recipe for failure. Many investors constantly buy and sell based on short-term price swings, thinking they can outsmart the market. The reality is that overtrading often leads to unnecessary losses. High transaction fees and taxes eat into profits, and emotional decisions lead to poor trades. Successful traders have a well-defined strategy, whether it's day trading, swing trading, or long-term holding. They use risk management tools like stop losses and position sizing to minimize losses. If you're trading based on gut feelings, you're gambling, not investing. Instead of chasing quick gains, develop a strategy that suits your risk tolerance and stick to it. 5. Ignoring market trends and cycles. Crypto markets move in cycles, and ignoring these trends can be costly. Many investors buy at the top of a bull market, expecting prices to rise forever. When the inevitable correction happens, they panic and sell at the bottom. Understand market cycles is crucial for timing your investments. Bull markets bring hype and rapid gains, while bear markets bring fear and massive drops. Smart investors buy when the market is down and take profits when it's up. The best strategy is to study historical trends and recognize patterns before making decisions. Following market sentiment blindly leads to losses, but learning to read cycles can give you a massive edge. 6. Getting scammed by fake projects. Crypto is full of scams, from rug pulls to Ponzi schemes. Unsuspecting investors lose millions every year to fraudulent projects. Scammers create hype with fake partnerships, celebrity endorsements, and unrealistic promises. Once they collect enough money, they disappear, leaving investors with worthless tokens. If a project guarantees insane returns, it's likely a scam. Always verify the legitimacy of a project before investing. Look at the development team, read independent reviews, and check for transparency. Avoid projects with anonymous founders and shady tokenomics. If you're not careful, you could lose everything in a matter of minutes. 7. Ignoring risk management. Successful investors don't just focus on profits, they prioritize risk management. Many traders put too much money into a single coin, thinking it will skyrocket. When it crashes, they lose everything. A smart investor never risks more than they can afford to lose. Diversification is key to reducing risk. Instead of betting everything on one project, spread your investments across different assets. Setting stop-loss orders helps minimize potential losses. The crypto market is unpredictable, and even the best investments can fail. Managing risk effectively is what separates winners from losers. Protecting your capital is just as important as making profits. 8. Holding on to losing investments. Many investors refuse to sell when their investments plummet, hoping prices will recover. They get emotionally attached to their holdings, even when fundamentals suggest otherwise. This leads to massive losses over time. A disciplined investor knows when to cut losses and move on. If a project is failing or no longer has strong potential, selling might be the best option. Emotional decisions can ruin your portfolio. Accepting losses and reinvesting in better opportunities is part of the game. Stubbornly holding on to bad investments is a surefire way to lose money. 9. Not taking profits at the right time. Greed is a major reason why people lose money in crypto. Many investors see massive gains but refuse to take profits, believing prices will keep rising forever. Eventually, the market crashes, and they lose everything. The smartest investors lock in profits regularly. Setting price targets and selling in portions ensures you walk away with real gains. If you never take profits, your gains are just numbers on a screen. Crypto is volatile, and waiting too long to cash out can wipe out years of gains. Knowing when to exit is just as important as knowing when to buy. 10. Following bad advice from influencers. Many people rely on social media influencers for investment advice without verifying their credibility. Some influencers get paid to promote worthless projects, misleading their followers. Blindly following recommendations without doing your own research is a huge mistake. Just because someone has a large following doesn't mean they know what they're talking about. Always verify information before making investment decisions. The best strategy is to learn the fundamentals yourself and make informed choices. Trusting the wrong people can cost you everything. Crypto can be life-changing, but only if you avoid these costly mistakes. Learning from others' failures will save you time, money, and stress in the long run. Don't let greed, fear, or lack of knowledge wipe out your investments. If you found this video valuable, make sure to like and SUBSURIB so you never miss out on crucial crypto insights. We break down the latest trends, strategies, and secrets to help you build wealth in the crypto space. Drop a comment below with the biggest mistake you've made or seen in crypto. We'd love to hear from you. Stay smart, stay safe, and remember, the ultimate guide to financial freedom. Start today.